Hey, this is Justin with DayTradeTheMarkets.com on Tuesday morning, a little before 10 o'clock Eastern Time. And I just wanted to set up a potential trade that I thought I would record and just go for it. What we like to do with our software is look at various pieces of evidence with the idea that each piece of evidence is a piece of the puzzle, and the more of these that come together, the more of an edge you have. So there's no robotic system type of an idea. There's no holy grail idea. You're simply trying to increase your edge a few percent at a time. And so the way we look at that, we have several pieces of evidence. We look at some real-time aggression bars, and I'm going to show that in a second, some high velocity moves, support resistance zones, and so forth, as well as big picture levels. And the more of those that come together, the better opportunity that you have. And so what we have here heading into at the beginning of this day here is our big picture bias is up. We wanted to see how the market would react around this 19 quarter level, and obviously we opened above that, stayed above that. Our next target up was this 22, and we've pierced through that pretty abruptly with this high velocity move box and this what we call level 3 or extreme buying aggression bar. Now we know again that the low of these high velocity moves, the low of this level 3 buying aggression bar should act as support. We also know that now that we're above 22, that should act as some degree of support as well. We have our big picture bias that is up and our filter that is dark green. So a lot of things you can see are kind of coming together. And so, obviously my thinking is I want to try to figure out some way to get long. And I think that's another important distinction that I want to make here is that a lot of traders focus on robotic trade entry type moves or trade entry rules, and having a framework for getting into a trade is very important. Don't misunderstand that. But the way that we look at things a little bit differently is that we try to, number one, put the market in context. So we ask ourselves, what's the market trying to do? How good of a job is it trying to do that? And once we have a pretty good feel for, are bulls more aggressive than bears? Are bears more aggressive than bulls? Are we breaking out or trending? Are we consolidating? Once we have a pretty good feel for the context that the market's in, then we try to look for low risk, high reward type trade entries. So, at this point, it's pretty clear that longer term, bulls are in control. We've seen the bulls have a very aggressive move in this area here. And so all things equal, I want to now look for a low risk way to get on board. Certainly I could just get on board long toward the high of this high velocity move and level 3 buying aggression bar, as well as the low of this level 2 buying aggression bar. That certainly is an option. It's a little bit aggressive, but with the market context, I think it could make some decent sense. Now, before doing that, though, I want to think about where would I know that I'm wrong, quote wrong, and that would be if the low of this high velocity move and the low of this level 2 bar wouldn't hold. So, somewhere down here in the 2050 to 20 area would be my wrong point. So if I got in around 23, that's, I'm looking at a 2.5 to 3 point risk. Am I willing to take that? I think that I am willing to take that as long as I'm willing to bail early if I see additional evidence that goes against me come into the market. So I think I'm just going to kind of look at this area here, this zone here, which is the high of this high velocity move, which is this box here, the high of this level 3 bar that had immediate follow through, and the low of this level 2 bar here. Those are it's kind of a nice area to look to be getting long. So I'm just going to throw an order there at around 23.
Order pending.
Okay, so if the market comes down and tests me at 23, that's fine. Now I've got an automatic order management system that's going to have a 2-point stop, so I'll move that down a little bit with the understanding that that's kind of an emergency stop. If the market really moved against me quickly, more than likely I'll see some bearish evidence start to come in the market, and I can bail early if the market's going against me. And in terms of these aggression bars, this is really the kind of the first building block of what we look at. These aggression bars are telling us in real time which side is more aggressive, bulls or bears, buyers or sellers, because it's really aggression that moves the market. You may have heard in the past that there are more buyers than sellers, or there are more sellers than buyers, and that's not actually accurate. For every buyer, there has to be by definition a seller for a transaction to take place. But it's which side is willing to pay up or pay down that's more aggressive that moves the market. So if collectively as a unit, or as a collective whole with the market, if buyers are more aggressive than sellers, the market's going to go up. Or if sellers are more aggressive than buyers, the market's going to go down. Okay, so we're trying to determine which side is more aggressive at a given moment, and then to what degree they are more aggressive. Is it just moderate, strong, extreme? You can see that we had that level 3 bar early on. That's the extreme buying or selling bar. We know that the low of that bar was where some extreme buying started, so that theoretically that's where the bulls should defend their territory. That's why we'd expect it to be some support. And now putting that into context with other information that we're looking at in terms of the bigger picture, we're above some bigger picture support levels. Our filter here is green, and so forth. It doesn't mean this trade is going to work out. It doesn't mean that it's 100%, but I know that I have an edge in my favor. I have evidence that's actually telling me that I do have underlying reasoning for taking this trade. It's not just a hunch. It's not just because I see the price moving. I have reasoning for doing so. So number one, I can define what my edge is. Again, with the filter, with the aggression coming in, with bigger picture levels, bigger picture bias. I do have an edge here, and now it's just a matter of managing my risk. So what I'll do, so this video doesn't get too long, is just pause this, and then when something happens, I'll start it up again. Okay, so just got filled there at 23. I've got my stop 2 points lower. I'm actually going to move it another point lower, as I mentioned, just because I want to give this area some room to act as the support that I expect. If that doesn't happen, or if I start to see some extreme or strong selling aggression, I may bail and move that up. But I want to give it plenty of room. I think so often, and I've done this a million times, you want to have good risk management, but we put our stops too tight. And what I've found with this software that really helps is I can give the market a little room to move, and I still have my emergency stop there in a situation where the market just takes off against me. In other words, I don't want to be unprotected in case there's some kind of cataclysmic type of event, flash crash, or just some news event, or who knows what. I want to be protected on a severe downside, but I also want to give the market room enough to move so I don't get knocked out of the trade before I'm, quote, wrong. Okay? Now, if I do see some contrary evidence, or some strong selling that comes into the market, then I'm going to reserve the right to get out earlier and not lose 3 points. I would say that it's going to be a pretty rare situation where I'm going to lose all these 3 points. I just want to have my stop far enough away that I'm protected without putting my position in danger of being too cautious. I hope that makes sense. In terms of targets, this is where a lot of different ideas come into play. Our next base real target is up here at 1530, and I've just got a 4 contract trade on here, and I've got it split because in case I want to split that off. It kind of depends on how you want to look at this. I look at this market as being very bullish at the time, so I'd rather hold on to as much of my position as possible. So I'm just going to move this part up there. I'm going to move this part. Just leave this at 5 points. If we can get 5 points out of this right now, and by the way, if the market moves up, I'm probably going to trail my stop, but I just want to move I want to give it a little room to move, and then manage it based on the evidence that I see. So I don't want to have what's what I'm trying to say. I don't want to put too many parameters on this. I just want to kind of see what the evidence is telling me. So again, you can see here that just to give you a little more information. In the short term, we've had a couple of decelerations come in off the high. That's just telling us that these bars are, the buying aggression is slowing down a bit. I'm not going to panic about that. We've also had some level 1 selling aggression come in, those light pink bars. Again, that's telling us there's moderate selling aggression that's come in. Again, it's just moderate. I don't want to get too caught up in that. It's just a little bit of information. I really want to focus on the level 1 or the level 2 and level 3, or in other words, here's a level 2, a strong bar, level 3, an extreme buying aggression bar. it's not until those get taken out that I'll think that things may have changed. At this point, it's just kind of the natural ebb and flow back and forth. Now, we've also seen that a support zone has come in here. So again, I want my stop to be below a good deal below that support zone, because I would expect that would act as some support. Now, this is typically a resistance zone. It's in yellow right there. It's what we call a caution zone, telling us that, normally that would be a red resistance zone, but this is not. There's a lot of strength in the underlying the market at this time, and that's also, you can see that with our dark green filter. There's a lot of strength underlying the market. So this area here, while it could be an area we want to monitor for potential resistance, it's also an area that we, to some degree, expect to get pierced and have the market head higher. Okay. So at this point, we're not doing much. It's a little bit slow. I'll go ahead and pause this and then put the video back on when something else happens. Okay, the market's moved up a point or so off of here, and at this point, I thought of a few things to talk about here. One is, would I want to potentially move my stop up? I could move my stop up to below this little mini fractal here. That makes some sense. However, I still want to keep it down here and just reserve the right to get out if some evidence changes, simply because I think what happens is, the idea is you're protecting your profit, but what can happen is, I still have no evidence or no reason to think that my trade doesn't make sense. In other words, the reason I got into my trade with the bigger picture bias up, the filter, in our favor, the big extreme aggression bars going through this 22 level, those reasons are all still valid. Nothing's changed. So why would I want to risk, getting nicked on a trade before it's had its chance to move? So that's one option. Now, another thing I thought of is, certainly it could make some sense to exit some of the position around this caution zone. That certainly could make some sense. That would negate some risk, and you could give yourself something of a break-even trade. And I would think about doing that. However, at this point, the market, in my opinion, is very bullish, and I'm always trying to put everything in context. So again, I want to try to, when things really line up, it doesn't happen every single day. So when it does, I want to try to take advantage of that and try to think about what's my highest expectation or highest expectancy. And I think it's to try to let this run as much as possible. So, if I'm right or if I'm wrong, I don't know, but I have to own that. That's my take on it. But certainly it could make some sense to get out of some of the position toward the high of the day. Kind of depends on your style. Another question I thought of, or another thought I thought of is, okay, going back to the entry, why did I decide to get in up here as opposed to waiting for things to really line up down here around this support zone and the low of this level 3 bar, low of this high velocity move, which we know would be ideal? That is, I think that's a very good question. I don't think there is any perfect answer to that. There's no black and white answer. Certainly this would be the higher edge, more conservative entry right in here, and you could still have, even a point to a point and a half stop on that. It's a pretty low risk, high reward type trade. The trade-off there is you might miss a move because this market seems pretty strong, so you might miss a move higher and not have the market trade down here and get you filled. Okay, so it's a trade-off. Now, the other side to that is, if you take the more aggressive trade that I took toward the high of this high velocity move and the high of this level 3 bar, again, it's more aggressive. The trade-off is I have to take more risk, because I still, I know that this could be support, so I have to take more risk there. But the trade-off is I'm not going to miss out on the move. So again, there is no perfect answer. It comes down to your preference, and it is a trade-off. And a lot of decisions that you make in trading are a trade-off. The important thing is not whether you're right or wrong, but that you own the decision. So I understand what I'm doing by taking the entry here instead of here is a little more aggressive. The benefit of that is I'm not going to miss out on a move if it does happen, and I've put this market as pretty bullish in my take. The trade-off to that is I have to take more risk. Okay, so if I wanted to take less risk, I could wait for the market to come down here. Now the trade-off there, the benefit of that is much lower risk. The trade-off is I might miss out. This market might take off without me. So neither one is right, neither one is wrong. It comes down to your preference. And it's what I think is just so important, and this is a subtle distinction, but what's so important is to own that one way or the other, not to get mad. So for example, if I took the trade in here, if this thing goes down, it stops me out, and I lose 3 points, well, if I would have waited, I could have only lost a point, point and a quarter, point and a half, okay? I can't be mad about that. I have to own the decision that I made. If I would have made the decision to get long in this area, it's lower risk, but now what happens if the market doesn't fill and this thing goes to the moon and I miss out? Will I be mad about that? I could be, but the important thing is you have to just make that decision and own it, because this is not a certainty. Trading, there's no certainty in trading. There's no perfection. There's no black and white. It's a probability exercise, and it's a decision-making exercise. So you try to think in terms of, how do I increase my probability? How do I make the best possible decision I can make right now based on the evidence that I have? And then once you make that decision, you have to own it. So I just wanted to, kind of go through that. I think it's an important distinction. So yeah. So let me just go ahead and pause this video again. Now, what I could do here is, it's decelerating a bit. I could move and really lower my risk and get out of this trade by moving half of my position down here and to get out. I'm not going to do that at this point. I'm gonna wait until I see a reason to get out of the trade. And at this point, I think this market wants to run higher. We will see. I could be wrong. I have to own that. Again, same idea. If let's say I could move my first half of the trade here and get out of this and have a no risk trade. Well, if this thing goes against me, that would have been the right decision. But I can't. I have to own the decision that I'm going for a bigger move, win or lose. I'm making a decision based on what I'm seeing and based on my style. Okay, so either way, I have to own that. So I'm going to pause the video and come back in a bit. Okay, it's been quite a while since I've been on, but we've tested the entry. No major buying or selling aggression came in until now. We're making new highs on this buying aggression bar. So at a minimum, I'm just going to move my stop up to the break-even point so that I've got a risk-free trade at this point. One other way to potentially manage this trade is to bring the stop up to a couple ticks below this latest buying aggression bar, because theoretically the market, and I put this in quotes, it should, the low of this should hold and it should head higher. If it doesn't, that's a potential sign of a turnaround. So one way to do that would just be to bring the stop up here and lock in a point and a half at a minimum. But I'm going to just let this thing run, and if they're, at worst, I've got a break-even trade, and at best this thing can run higher. If I do see some strong selling start to come in, then I can bail. But at this point, break-even type of a scenario, and we'll see if this thing can head higher. Okay, I'll pause it and come back when there's more to report. Okay, it's several minutes later. It's an extremely slow moving market right now, which has been the case really all year long in the ES. It's been a little brutal, to be honest with you, but at this point we just have to certainly look at other markets as well, but in this particular trade that I'm in, just understand these are the conditions and things take a little while to develop. But at this point I'm still in a pretty good situation in that I've got a no risk trade here. I still have no reason, no evidence that some strong selling has come in, so I'm just going to keep holding on to this thing, even though it's a slow moving market, and just let it go until I see a reason not to be in the trade. So in other words, the reason I got in the trade originally is still valid, so I'm going to stay with that until something changes. So again, I'll pause it and just come back in a bit. All right, thanks. It's a few minutes later now. While we're kind of waiting, this is just an extremely slow market. I wanted to bring over a Russell chart here. There's some correlation between the Russell and the emini S&P, and this is, now granted, this is a 2-minute chart. I tend to, in terms of time frames, I like to look at kind of my main day trading type time frame for a certain market. In the ES, it's typically a 1-minute. In the Russell, it's a little bit of a quicker market. It's more of a 2-minute. Varies. You can trade a 4-minute, a 5-minute, a 15-minute, whatever you like. You can trade a 30-second if you want it quicker. Point being here, this is a slightly different chart, so it's a 2-minute chart. But here in the Russell, there is a little bit of bearish evidence. It wasn't as bullish off of the open here with the level 2 bar. Still bullish, and we would expect the low of this high velocity move to hold, but you can see that when we tested the high, we actually did get some relatively aggressive selling that's come in. It doesn't necessarily mean the the ES is poised to roll over, but it is a bit of a heads up. You know, but at this point, again, I've got no risk on the trade. I'm at break even, worst case. You know, if some buying can come into this market, and that would probably be confirmed in the Russell as well, and we're you know, reaching a area of potential support in the Russell. You know, in terms of, if you think about it in terms of risk reward, at this point I've got next to no risk. My reward is still decent. And again, this is just, a lot of traders would have already scaled out probably at least half their position when we tested the highs of the day on this potential resistance zone. So you could be ahead of the game. I tend to try to hold as long as possible. That's just based on style. So, you know, we'll just keep holding on to this and see if, you know, worst case, I get stopped out for, you know, I lose commission. Best case, this thing can run higher, and we'll just see, we'll see what happens. Hey, I thought I would check in again. It's these are just brutal conditions here in the emini S&P right now. It's just we're trading within about a point and a half range, or 2-point range for the last 2-3 hours. I mean, I got in this trade 3 some hours ago. You know, but with that said, this is, I think, can be kind of a teaching lesson in this, in a sense. Number one, that's part of trading at times. At times it's painful. You have to be patient. I've been doing some emails, looking at some websites, that sort of thing, keeping myself busy. But trying to stay focused on my decision-making process, which is, okay, I still don't have any evidence that sellers are coming in strongly, so I'm going to hang on to this trade. In other words, the reason I got in is still valid. If that changes, I'll adjust my strategy, but the reason I got in is still valid. I suppose in these conditions, I could make a pretty good case for getting out of half the position just to lock in some profit. Kind of talking myself into that as I'm speaking, but I'm just going to keep going with this right now. But you know, that's a possibility. But you know, I think it's important to understand that sometimes you have to be patient. Sometimes the market's kind of an all-you-can-eat buffet of great opportunity. Other times, and it seems like it's been that way lately this year in the ES, you just have to be really patient and wait for good trades and wait for, you know, situations to develop. So just wanted to say that here. But you know, we're still, I know this video is, you know, only X minutes long, but you know, it's been 3 hours in real time or whatever it is. That's just part of it sometimes. If that's too painful, you know, another option is I can get out here and take a 2.5 point win and go do something else. That's certainly viable. I think it's important to really kind of check in with yourself. What are you feeling? If this is just driving you crazy on a trade like this, and that's going to happen. A lot of times I'm in a trade for 2-3 minutes and it's great. A lot of times, you know, not a lot of times, but sometimes it's like this and it's 3 hours and it's just kind of barely moving. So you just got to check in with yourself. If you're driving yourself crazy and you're starting to think about making bad decisions, then just get out and live to play another day tomorrow. So, you know, just wanted to go through that. I'll check in a little bit later when something more happens. All right. Okay, it's a few minutes later here, a little bit after 2 o'clock Eastern time. You can see we just made new highs on the day, and I'm happy that it happened on a level 2 buying bar. Now, it's only a 2-tick bar, which isn't huge, but you know, in these conditions, that's something. What I'm going to do, though, I'm going to bring my stop up a couple ticks below there. I just want to lock in. If this thing keeps running, great. That's ideal, and I'd like to keep my targets up here around the 30 area, our next target. But if this thing can't get any lift off when it's making this new high, and the fact that it's only a 2-tick bar gives me a little bit of pause, I want to just make sure I lock in some profit here on this trade. And again, it comes back to that idea I was talking about earlier. I have to own this one way or the other. If this thing takes off and is a great trade, great. If this thing stops me out and then turns back around and goes higher, well, then I could say, well, I should have, you know, I should have kept my my stop down lower. It's just kind of you just have to decide what you think is the best option. And the fact that it was only a 2-tick bar on the high of the day gives me a little bit of pause. I want to, you know, lock in some profit there and just see what happens. On a day like today, you know, we'll just see. If I'm right, I'm right. If I'm wrong, I'm wrong. I just have to live with that. But we will see. Okay, a couple minutes later here. I have to admit I got a little bit lucky here to stay in this trade. I'm going to leave my stop where it is. The low of that level 2 bar did hold, and that was the logic of why I trailed it up, in that just because market conditions today are just so incredibly slow, I wanted to make sure I locked in something and I had some reference to work with, which was that we had a level 2 bar that came in right here, and we know theoretically that the low of that should hold. So if it gets taken out by a couple ticks, and the fact that the second bar was a level 1 selling bar, if it gets taken out by 2 ticks, I was thinking that we weren't going to make much on new highs, but it still gave me a little room for this to hold. Now we've had this level 3 bar come in, and again, that quote should, the low of this should hold, and so I'm just going to leave my stop where it is. I've got a decent profit there if it goes against me, and if this thing does run higher, all the better. So that's the logic on that one. I'll pause this and play it again when there's new information. Okay, it's a few minutes later. We've had another smaller support resistance zone come in. If you can see that, it is a caution zone, so our expectation is that we're going to go through there. However, I'm going to try to take off a portion of the position right there and just lock in some profit. Like in 4.5 points there of profit on the first half.
Target filled.
So we got that. So I've still got, my next target up there is the 30 area, which we expected before the day. I'm going to go ahead and leave my target in there, a couple ticks below that target. So what we've done is locked in on half the position, locked in some profit, a little bit earlier than I would maybe ideally like, but it's just a slow market, and we've got a potential resistance there. I'm just going to take some, and now I'm going to keep my the remainder of my position still with a decent profit, a couple ticks below the low of this support zone. So it's theoretically, if the market does test back in here, it quote should hold in this area and try to head higher. If it does not, well, I'm protected there, and if it does head higher, then I'm hoping it can head up toward the 29.50-30 area, which is an expected area of a bigger picture expected target, or I should say resistance zone. So I'll pause this video and come back when there's more information. Okay, so it's a few minutes later now. We have come off of the resistance here, minor resistance, a caution zone we call it. We've now tested into the support. My hope is that it takes off from this support and goes up and hits the next target. If not, if this support doesn't hold, we'll go down and I'll get stopped out for a decent trade. So we'll just wait and see on that. I'll pause it again. Okay, so the market has gone back and forth between these two levels. Been in this trade literally almost all day. We've finally seen some strong selling come into the market. You can see here with this level 3 selling aggression bar. Now, I'm well positioned here. I would probably move my stop 2 ticks below the low of that bar. If it wasn't already there, it happens to be there. So again, if this gets rejected, that's a good sign. We'll probably go make new highs. If we have follow through lower from this selling, then I'm going to get my stop hit, and it was a decent trade. So we'll keep monitoring this and go from there. But the idea here of a extreme selling in an up market, that can often be, again, the start of some selling coming in, that price is auctioned high enough to attract some selling, or it could be just some blow off and attracting some buying, and if that gets rejected, we go make new highs. So I'm well positioned in this sense, in that if this doesn't get rejected right away and go make new highs, then I'll have my stops in a good place. If it does go make new highs, great. I'll trail that up there and see what happens toward the end of the session here. So I'll pause this again and we'll go from there. Okay, it is 3:50 Eastern time, where I'm on the East Coast, and this market has rejected off of this level 3 selling bar, as I was thinking it might do in an up market, and if not, I was protected there. Now, I'm a little embarrassed to do this, but I actually have to leave. So, what I'm going to do is just bring my target down there and get out. Now, I'd like to hold this till the close. Whether or not that would be a good decision or not, I don't know, but that's something I would like to ideally do, and I'm a little embarrassed to have to do this. I didn't expect this trade to go all day long, obviously, but the let me just hold on one second. Let's just hope that gets filled here shortly. I'll go to my dome if not. So anyway, I'm a little
target filled.
There we go. I'm a little embarrassed that I had to do that on the video, but I've got to take my son to an appointment, and I want to try to get this video out before we leave in 20-30 minutes. And this video is getting pretty long, so it's probably going to take a little while to render. So anyway, let's review though real quick before I shut the video down. Let's review kind of the decision-making process that I made. So heading into the day, we had an big picture up bias in the E-mini. We wanted to see how the market was going to do at the 19 quarter, and we opened above that, and then we wanted to see how it would do at the 22 area. And you can see that our first major structure was this high velocity move box and this level 3 buying aggression bar. So the first decision that I had to make was how, makes sense that I want to be in the market, and the filter is green as well, which adds a little bit of additional confirmation. So the idea, definitely want to be in the market. How do you do that? Conservative entry would be to wait for the market to test down here into this support zone and buy there. I discussed that earlier in the video. It's been 4 or 5 hours since I did that, but on this video it was probably 10 minutes ago. I don't know. So I decided to kind of go with the combination of quick follow through above this level 3 bar and this level 2 bar, which should act as some support toward the low and the high of this. So kind of 3 things all in one right there in this area right here, where I wanted to look to get into the market. Obviously understanding the trade-off of that I needed to take more risk if I wanted to get there, but I wasn't going to miss out, versus if it turns out I would have missed out if I had waited down here. You don't know that at the real time, and this trade happened to work out pretty perfectly. Once we got up in here, I still wanted to wait until we saw some negative evidence come into the market. 2 hours of 2-point range later, I got a little impatient, saw some buying come in, but a small range, and so I moved my stop to 2 ticks below there. Got very lucky not to get stopped out right there. And then when we had this level 3 bar come in, I moved my stop up a couple ticks below this support zone. We had this level 3 selling bar come in just a little while ago, and my stop was a good place. It got rejected, so ideally I would have liked to hold it even longer to see if we could go test that target around 1530, but real life intervenes, and that's part of trading, so you have to deal with that. And I'd rather just be out of a trade if I have to leave, rather than hope something doesn't go wrong technically. So that's the logic. Again, this trade worked out pretty much perfectly on not the greatest day to trade ever. This one worked out pretty well. More importantly than whether it worked out or whether even if this thing would have come back and stopped me out at break even in here, it still would have been worthy, because it's all about the decision-making process and how you go about taking the evidence that you see and making the best possible decision, and more importantly than that, owning it. Okay, so whether if I'd have been stopped out right there, I would have lost 2 or 3 points more. I wouldn't have made the 2 or 3 points more that I did, but I can live with that because the decision made sense to me. I just got lucky. So hopefully that makes sense. Let me know if you have any questions about this. Again, this is just a 1-minute day trade on the ES, on a slow market in the ES today. You could trade this on basically any time frame, any market, that sort of thing. So let me know if you have questions, and we'll talk soon. Thanks.